Joining us now to break down some of that action is Telsey Advisory Group's Managing Director and Assistant Research Director, Joe Feldman. We're going to get your thoughts on the big report of the morning tomorrow, which is Walmart, in just a moment. But, Joe, you also cover Dick's Sporting Goods. What do you make of this?
Yeah, I'm not particularly thrilled to hear that Dick's is going after Foot Locker. I see why it's a good deal for Foot Locker. Obviously, stock is double. The offer price would be double what they currently are trading at. But from Dick's, and they've been looking for a buyer for a little while at Foot Locker. Now, from Dick's side of it, the bull case would suggest, okay, you could take out a competitor, you could get greater buying power with the sporting goods brands and have a broader assortment, both off mall, on, and then in the mall type of stores and format. But Foot Locker's a pretty complex organization, right? I mean, it's got thousands of stores. It's across the world. I mean, a third of their business is international. They have multiple brands and several within the same malls. So it's a lot of work for Dick's Sporting Goods to digest this. And honestly, it's a long time ago, but they don't have a great history of going after and acquiring some businesses.
Okay, so there is the interesting take from Joe on what's happening with Foot Locker and Dick's. I want to now pivot what's happening, Joe, with tomorrow, because it is arguably the earnings report of the retail season, and it's Walmart. So the open question to you is, what are you expecting?
Yeah, I think we're going to see Walmart put up pretty solid sales numbers. They had an analyst day back in second week of April, and they told the investment community they were going to do sales growth of 3 to 4%. They said everything was fine. We know that leading into Easter, sales picked up for most of retail, and once spring broke across the country, we've seen pretty good trends. So I think sales are going to be pretty solid. I'm a little concerned what they're going to say in terms of earnings. They did widen that range that they had given. So we might see, that's where there could be a little slippage to the downside, just given some of the expense structure that they have and some incremental expenses like property claims, things like that they're going to have to deal with. But, the go forward, I think will be pretty interesting. I think they're going to talk about a consumer that is still stretched, but somewhat resilient, especially that middle to upper income consumer. I think they'll also talk about that lower income consumer facing, a more pronounced paycheck cycle and really trying to stretch those dollars through the month.
How much are you, Joe, going to be scrutinizing the individual results and commentary coming from places like the grocery segment versus kind of the soft goods, hard goods segment versus the bigger ticket items? And what exactly would you read into that with regard to Walmart's story vis-a-vis the tariff outlook?
Yeah, I think that's going to be a big focus as well, like what the merchandise categories that are selling. You're definitely seeing good trends in the grocery space, consumables, any household essentials. And I think Walmart's going to be a big winner within that. We've seen them taking market share in those categories. I'm hoping to see that their discretionary business continues that path of improvement that we've seen the past couple of quarters, and that their online business is still growing nicely, that membership's still growing. I think we're going to see a lot of those trends continue. Again, it was, a couple of weeks ago when they had that analyst event, they sounded pretty positive about underlying trends, that they had not really seen any slippage in the consumer, especially as you look at the different distribution of income cohorts. And so I think we're going to see that's what's going to carry Walmart this year, is likely a very heavy dose of consumables with sprinkling in some discretionary goods on top of that.